Welcome everyone to Klawd Talks. This is going to be the first episode. Today we have with us Mr. Ned Phillips from Singapore. He has 30 plus years of experience in sales and he founded Bambu, which is a wealth tech B2B advisory platform serving financial institutions, asset management firms and all. Bambu's clients were HSBC and Standard Chartered, some of the well-known giants out there. Ned is basically a veteran in the field, and today we are going to have a great conversation with him about everything SaaS and sales. So, welcome, Ned, once again. Thank you
Thank
for
you.
joining.
Well, look, thank you very much. I appreciate it. Yeah, one of the skills I have is that I got old. So when you get old, it means you have a lot of experience. I've been doing sales for, as you say, like 35 years, and I spent about 22 of those years in corporate, so selling to big enterprise. And then I did a startup, and as you said, we actually at our startup managed to sell to some of the biggest enterprise. And now I do sales advisory. So yeah, let's dig into it because I love the topic of B2B SaaS and B2B
Yeah.
sales.
So, Ned, going back to your journey, when did it all start? What led you to sales?
So I'm 58. So I left university in 1989. And I had an economics degree, but I didn't really love economics. I didn't really love, going into finance as like research or economics. And I must admit, I was a bit lost. I was like, oh, what am I going to do? And I saw an advert it said, insurance broker wanted. And the word broker made me think, oh, it might be quite nice, like a stockbroker or anything. But honestly, I took the job and it turned out the job was cold call insurance sales, old school, picking up the phone. This is 1989 before the internet. And I was a bit horrified at first. I'm like, wait, I'm just going to call people all day long and sell stuff. And it was hard work. And I realized pretty quickly that it's quite a binary business. If you work hard and understand how to do sales, you'll make money. Like a lot of young guys, I like making money. So that was my introduction. I actually didn't really think I was applying for a sales job. I didn't really know what a broker was, but a broker is somebody who just creates deals. And yeah, that started me. I've sold everything from kind of famously horse manure that I talk about quite a bit, like selling horse manure for garden fertilizer, through to so many different things, and ultimately tech and finance. But yeah, I started because I saw an advert that I thought was more glamorous than it was, but ended up being cold call sales.
Interesting. There is Ned a stereotype around sales. Nobody likes that career because it has that pushy vibe to it, the transactional vibe to it. But I think over the time, the emergence of B2B sales have made it more technical and consultative. You are talking to CFOs, CXOs about the product. But what are your thoughts about this stereotype, this cultural thing about sales?
It's so true. If you say to somebody, hey, there's a sales guy waiting to meet you. Do you want to meet him? People are like, no, I don't want to. And it's this idea of a dude in a suit pushing. Unfortunately, there's a lot of that stereotype is still true. And here's the thing. Humans don't want to be sold to. They want to be listened to. And a lot of what I try to talk about and teach is your job is not to sell. Is to listen to them. And if they have a problem and you can solve it, then you can talk about your product. But the reason the stereotype is there is that it is true. And a lot of people still try to oversell and overpush and talk about their product. And I think the more we can change the industry to be consultative, listening, understanding. I tell all the startups I work with, your job is not to sell your product. Your job is to get them to ask you what you do. And you do that by listening to them. But yeah, your point is right. The average salesperson gets it wrong.
Yeah, right. So during that timeline when you were selling to people, how did Bamboo happen? Was it an idea? Were you testing an assumption? What was the problem statement?
Wow, wasn't
Yeah.
exactly that, man. So I was 48 at the time. I had about 25 years in corporate. No, maybe not 25, 23, whatever. Had a lucky investment, made some money, could take some time off, not enough to stop work altogether. And while I was taking some time off, fintech was kind of starting 2015, 2016. And I had previously really worked in fintech, a company called E-Trade, one of the early kind of versions of Robinhood. And someone was like, you should do a fintech. And, my ego wanted to do something. To be honest, Bamboo came up because, are you familiar with what robo-advisors are? These wealth management tools?
Yeah, I understand a
Like,
bit of it. I like helping institutions to, streamline tech.
Well, no, well, actually, no. So that's like kind of robotic advice, but Robo is like a wealth management platform. So it is automated saving. And I saw, so it wasn't really a problem statement. It was more a bit of, it was a bit of ego. I think I could build a startup. It was also a result of one of my worst decisions ever. I met the founders of Robinhood in 2015. They discussed about me running Robinhood International for them. I remember thinking they were like your age at the time, no disrespect to you, dude, but they were like 25. And I was like, oh, what do these guys know? I could build a startup. I could do my own. And I was like, well, if these kids could do, and Robinhood was tiny back then. Oh my God, if I had taken the job to run Robinhood International 10 years ago, whoops, could have done okay. So it was a combination of, I know how to sell tech. These Robinhood guys show that finance and wealth tech is coming. Maybe I can start a company that sells this tech to banks. I know how to sell. So it was more that than some deep desire to solve a technical problem. It was more, what could I build and sell? And look, we did. We had a good run. Look, ultimately, we had to shut it because we actually sold too much and couldn't deliver. So we had an oversale, under delivery problem. But yeah, it didn't start out of some great problem statement, more just a kind of convergence of my desire to sell, meeting the Robinhood dudes and trying my own thing.
Yeah, great. I read somewhere that Bamboo won the best place to work award somewhere into 2019, if I'm correct.
Did, man.
Yeah. So, what was it about? How did you created that great team when that company was formed? What was that ideology behind it?
Honestly, Emad, thank you for bringing that. It's one of the proudest parts of that journey. I don't really love tech. I love people. Like, I love people. I like tech. I love people. And I had the great fortune many years ago to work for an amazing manager who said the job of a manager is to make people want to come to work. It's not to tell them what to do, it's to make them want to come to work. And I remember thinking about it. And he told me, if you go on holiday or go to the movies, you pay. Why? Because you want to go. You want to go on holiday or to the movies. But when you come to work, you get paid. Why? Well, because you don't want to go, right? That's why you get paid. They're paying you to come. But the manager said to me, what if I made the place so fun to work, so motivating, gave you the ability to do what you wanted to do, and I paid you? How good would that be? I'm like, okay. And he treated us like that. He sure put us directionally, but in the right way. He hired good people, but then he created a culture of motivation, of interest. He cared about us. He let us do our stuff. Sure, he would tell us if we did wrong. So that's what I took to Bamboo. I really wanted them to come to work. And, we created a couple of things that we did. I really took interest in people individually. We also always worked in one big open space. I never had an office. No one had an office. We all sat together. We had a town hall every Monday where everybody spoke. Everybody spoke. We all stood in one big room. Everybody had their 30 seconds. We talked to everybody. Um, we had this deep belief that everybody's the same. I'll take the rubbish out. It doesn't matter. Like, we all in this together. There's no hours. You come because you want to come. Like, we believe this.
Yeah.
Hire the right people. Don't, like the Steve Jobs, don't hire great people and tell them what to do. Hire great people and let them do what they do. So I'd like to think, and certainly before COVID, when we were all together, we had this amazing one office, big room. We put graffiti on the walls. Like, we worked hard, but you could walk in there and just feel it. Like, it felt great. And I tell you, that award, like, that just wasn't best place to work, like, of small startups. We beat Facebook, Google, we beat everybody. Like, we beat everybody as best place to work. Yeah, that was cool.
Was it a hard decision letting go the team after building a great team, winning the awards, and then, layoffs, company going in the direction that you didn't want it to go to?
Totally brutal, man. Totally and utterly brutal. Like, startup life is the highs of highs, the lows of lows, right? There are times when you feel like an absolute superstar, and there's times when it's brutal. It's hard. I think in a startup, particularly when you're the founder. Every day you've got to make decisions and you believe you're making the right decisions. And, we did a lot of great things. What did we get wrong? We customized too often. B2B sales is about selling what you have, not trying to sell with too much customization. And we customized too much at the wrong price. And, we just made some classic business mistakes. And as we we didn't let go of everybody in one go. We kind of sized down, trying to make profit, didn't quite get there. And then at the end, we had to let the team go. Yeah, absolutely brutal. But you learn, I try to, after we shut it, we had a weird experience. We sold the company as we shut it. We sold the code multiple times to a lot of our clients. Quite a few of our team got job at our clients, but it's 2 years. 2 years has passed. I still lie awake at night sometimes, but not as much anymore. Like it gets, and you also realize that hard things are good for you, right? Not that I wish that on anybody, not that I wish that Bambu ended up like it did, but you learn from hard things, right? So,
Yeah.
yeah, to answer your question, yeah, it was.
Did running help you at the time?
uh, there was a period where I stopped running for 3 months. Like I was, just my mental health wasn't in a great place. That it's so stressful. So running's always helped me. As you see on LinkedIn, I adore it. It keeps
Yeah.
me right. It helped me throughout all of Bambu, but there was at one point where it was so much. I was so overwhelmed that. And do you know what Strava is? I don't know if you're a runner. So Strava is an app where runners record their workouts, right? So I have friends on Strava. They know where I am because I'm running in San Fran or London. No, and there was and they know Ned runs almost every day. And
Yeah.
then for like 2 months, I didn't run. And, I'm keeping at work. I'm trying my best. People see I'm stressed, and then Strava friends message me. Hey, dude, are you okay? Like, are you okay, dude? Because they didn't know about the startup world, but they see, hold on, Ned hasn't run for 2 months. So people are like, what? What's up, man? Like, there must be something. So, of course, it helped me, and it's incredibly beneficial. And obviously, I do ultra running, which is like startups, long time suffering. Startups are long time suffering. So, yeah, it helped me massively, and I'm always grateful for it. Now as I build this new little business I'm doing, I love it. Like when I run, it gives me energy to do more. But yeah, there was a short period when it was.
Great. Bamboo at the time raised, I think, $20 million in total, if I'm correct, according to the reports. So, is there a thing like raising too much funds, or is there a thing like raising too early? What are your thoughts on fundraising at large for B2B SaaS?
These thoughts are now thoughts after the experience, right? There's different thoughts during the experience. And there's no right answer to this. I'm just giving you my experience, okay? I think we did a good job of raising for most of our time. Our first round was 400,000 seed. Then we raised $1 million in 400,000 in 2016. Then we raised $1 million in 2017 and 3 million in 2018. I think where we probably raised a bit much for us was in 2019, we raised 10 million. And I think it gave us a bit much and we tried to grow too fast because of it, when we should have we went from 30 people to 100 people, and that was a mistake. And again, I'm not blaming the people who gave us the money or ourselves because we thought we were doing the right thing. But for me, and I can only speak for me, I'm better when there's less capital, more restriction. It wasn't that we went out and flew business class and brought shiny things. We just tried to grow with too many people too quick. I'm more of a fan of having the right amount of money. Now, how much is that? It's hard. But I would say if you raise money, and not because of the dilution, not because you're giving stock away, more because unless you're a B2C, huge, fast growth and you need to acquire customers, if you're B2B, I worry that too much capital loses your focus. You launch new products or you customize too much. So I would raise the amount of capital you perceive you need, have 12 to 18 months runway, of course, because once you get under 6 months runway, woof, even 9 months runway, you get under that, stuff gets hard real quick. Like I heard this amazing phrase about raising money, which is, let's say you've got 6 months or 9 months runway. As a founder, the days are long, the months are short. What it means is you work 18-hour days, and before you know it, that 9 months, whoosh, gone. And you've got no runway left. So raise enough to not be too stressed, but don't raise enough to feel comfortable.
Right. I think that's the thing about strategy. You always look in retrospect, in hindsight, what went wrong. At the moment, it it's just like you have to go with it.
You do. And you really believe, and you're told, hey, if there's money, take it. Like, you need money. And that's true. That's true as well. What I would have done differently now, if we still raised that money, I would have not gone after growth so aggressively, because we grew 2021 through COVID, okay? But in 22, the investing landscape changed pretty dramatically. And we did not anticipate that. And we did not build, our business never quite got profitable. It got closest as we were closing, because we had less people. But you can't really predict the interest rate environment. You can't really predict where the capital is going. For some people now, capital's super hard. For some people, capital is available in AI, right? So you don't quite know. There might be an AI capital winter soon, right? And nobody
Yeah.
can get capital, right? We don't know. But I would perceive that, some people will always tell you, if there's money, take it. You always need more money. But if you get the money, here's what I would say. If you get money, assume you don't have it.
Yeah.
Don't spend it like you have it. Spend it like you don't have
Right. What used to happen at the time of Bamboo when you were in investors' room? What was the ideology of investors? Were they looking at growth of the company? Were operating margins was an element? What was that investing ideas?
We were quite new in the wealth tech space. So we were what's called a wealth tech company. We were winning big logos, HSBC, Standard Chartered, Franklin Templeton, etc. We got to the low millions of rev, but not, we had millions of dollars of rev per year, but not tens of millions. And I think the thought process was, these guys got good brand, solid tech, not huge rev, but good rev, good pipeline, growing. Margins and gross margins weren't great, but fixable. Our issue was we kept customizing too much, but that was fixable. And I think one thing you learn, it's very hard to convince an investor who's not already interested in your space to become interested in your space and then invest in you. So we went to wealth tech investors who knew our space, and we stood out quite a bit because we had a good brand, told our story a lot, won awards, had good clients, had decent revenue, not great. And that's how we won a lot of capital. They could see that our risk was, could we close the gap between margin? That was the area we needed to struggle with. Could we raise our prices quick enough? So that's the mindset. Wealth tech investors betting on the industry saw that we were certainly a player, had an opportunity, had done a lot of good stuff, knew the risk was, could we close the gap by raising prices, build more efficient tech? And we couldn't quite make it in time, but that was their thought process.
Right. Ned, what are your thoughts on go to market strategy? Early stage founders struggle with everything at once. Is it the ICP that should be in position? It is the value proposition, the channels of distribution, the sales. If you have to advise an early stage B2B SaaS founder about developing their GTM playbook from scratch, what are some key elements that they should focus on in the beginning?
So I'm not going to tell you what to expect, I don't think. I'm going to tell you what I think.
Yeah.
All of that stuff you mentioned is completely true. ICP, all of that. Almost no founders. The one thing is that they should do is do the work. Most of them just don't do enough outreach. They just don't do enough sales work. They just sit and think about it. Oh, what's my ICP? I'm like, dude, send 100 messages. They're like, what do you mean? I'm like, dude, send 100 messages. Spend 2 hours on LinkedIn every day connecting with people. Pitch 1,000 people. Do the work. It's not a mystery. So in sales, there's two levers, volume or velocity. So B2B sales. You're the founder of a company that builds ABC tech, right? You've got to do a lot of volume. What is volume? How many sales actions you take, how many emails, how many LinkedIn comments, how much outreach, how much content you produce. Like, are you doing enough? Are you having enough meetings a week? I meet founders, they're like, yeah, I had 5 meetings this week. I'm like, wait, you mean 5 today, right? They're like, no, 5 this week. I'm like, well, you're going to fail. Like 5 a week's not enough. Most of them have way too low volume. And then velocity. They're like, yay, we contacted them. We're waiting for them to come back. When did you talk to them? 2 weeks ago. Dude, like, they're not coming back. You haven't followed up with speed. And the other thing is content. And content's part of volume and velocity. Are you producing content every day? Because most founders think people want their product. Nobody wants their product. I tell every founder I work with, your product sucks. I don't mean their product sucks. What I tell them is your product sucks and you suck. I don't mean you suck. What I mean is no client wants to buy your product And no client gives a crap about you. What they want is the benefit that you and your product can bring them. So what I tell them is, don't describe your product. You're only doing two things with B2B tech: making money or saving money. That's it. That's it. Explain how you either make them money or save them money. If you can't do that, shut your company.
Right.
And my message is kind of a brutal: be super clear about the benefit and do a ton of work. Sure, you can use automation and all the other tools. And I help a lot of startups now. I rarely meet a founder who does enough volume or velocity.
Yeah. It's great that you mentioned content here, because I have a thought that suppose a business has assets like inventories, equipments, cash in bank. Similarly, we have marketing assets like people engaging with your content, the impressions you generate on LinkedIn. So creating a strong inbound engine is something that is very, key and crucial to SaaS startups. Do you think if you have a great inbound engine, then it reduces the dependency on the outbound?
I am such a fan of content today.
Yeah.
And I actually just messaged the CEO of LinkedIn. I don't know him, but he's made a couple of comments on my stuff. And he was talking about LinkedIn being an inbound engine. What do we think? And I was like, dude, I've been selling for 35 years. LinkedIn is the single best inbound engine for B2B I have ever seen. It doesn't mean you shouldn't do outbound, of course. But so for my little business today, I do outbound for fun now. I don't need to do outbound. I get more than enough inbound. And let's face it, like, I'm a Z grade influencer on LinkedIn. Like, I'm at the bottom of the tree. Like, I'm not a big creator, but I put content out every day. I do my videos. I give free sales advice. If you are a B2B founder, content strategy, and there's two reasons. Number one, you'll get inbound. And what is a content strategy? Never talking about your company. Remember, no one gives a crap about your company. What problem do you help solve? If you're in insurtech, why is insurance important? Why are you helping? Like, I'm in sales. I give free sales tips every day. Like, if you look through all of my content, you'll never see me once promoting my company. All I do is free sales tips. Of course, every Sunday I give a running tip, but that's my quirk. I give free sales advice. And what happens is people message me, go, hey, dude, love your content. I've got a bit of a sales problem. Can you chat? Hey, dude, sure, I can chat, man. Because if I can chat to you, I can sell to you, right? And it also means when I do outbound, hey, I'm Ned. I'm the sales guy. Can I help you? And they're like, and I put, you can find me on LinkedIn. Not you can find me on my website. And when they find me on LinkedIn, they're like, oh, this guy's cool. Like, I'm not cool, but, and so when founders tell me, Ned, I don't know how to do content. I've never posted. Oh, that's a young person's game. I'm like, dude, I'm 58. Shut up. If I can do it, you can do it. It's not a mystery. And you know why people don't do content, particularly B2B founders? It's because the cost of leads is embarrassment. They're not willing to embarrass themselves by putting out stuff on LinkedIn, which is crazy. And I tell them, hey, if you're not willing to do it, someone else will. Someone else will put out content and win the deal. So inbound and outbound must have both, but your inbound strategy and your content strategy is super critical because it creates leads, but also your outbound guys, if they look at you, when you message them, they'll check you on LinkedIn. And if you've got nothing there, they're like, oh, okay, this dude just wants to sell me something. Whereas with somebody who provides content, but only 1% of people post on LinkedIn. It's crazy. Dude, it's crazy. Most B2B founders just suck at it.
Right. Very interesting. Ned, how do you think, what does the future of fintech look like? Maybe in 5 years, 10 years down the line, how is the wealth tech industry doing? Because AI is gonna, grow at an exponential rate after 5 years. So what are your thoughts on it?
I mean, you ask about the fintech industry in general. Obviously I'm B2B as well.
Yeah.
Maybe I'll give you two thoughts, one from an industry and one from a sales perspective. From an industry's perspective, it gets faster, better, cheaper, right? Like, is it Moore's law? I think it's, the rate of change only gets faster, something like that. Same in fintech, right? You know, the legacy banks will catch up a bit. Even the new digital banks will feel a bit legacy, right? Everything just gets faster, better. And our expectations. I'm not a great at foreseeing, general tech advancements. But what I would say is this: sales enablement will get better, but the same thing will be true. Humans who work hard in sales and use the tools, so will win. My tool when I started, was a phone book and a literal phone and my shoes, because I walked and knocked on doors. And coming back to my running, because I could walk further than everyone else, I knocked on more doors, right? Then there came Excel, where I could build little CRMs. Then they came when I first got email, like 25 years ago. I'm like, what? I can email people? This is crazy. I don't have to knock on their door one by one. Wow. I thought it was mind blowing. Of course, then, 5, 10 years ago, we had good CRMs, outreach. Now we have AI automation. If you are a creative, hardworking salesperson, the quality of sales in 5 to 10 years will be amazing. There will be less salespeople, but they will be better. The sales industry will change. There'll be new roles like go-to-market engineers who use automation tools. The salespeople who lose will be the ones who either just automate with no creativity or don't automate at all and get left behind. But great human salespeople will always still win.
Yeah, great insights. I think we have hit the half an hour mark. I'll just quickly wrap up with a rapid fire round,
Go for it.
and you may give insights, your thoughts on those questions too, if you feel like. So, first question is, one thing running has taught you about business and life.
If you feel crap, wait a moment, you'll feel good. And if you feel good, wait a moment and you'll feel crap. In ultra running, if we feel good, we know we're going to feel crappy soon. But if we feel crappy, we know we're going to feel good soon. When you run a long way, you have these ups and downs. Same in startups, same in life, right? Nobody has all good, and hopefully nobody has all bad. What it's taught me, ultra running has taught me that you just keep at it, right? The good times turn bad and the bad times turn good, but overall it's fantastic. That's my learnings.
Great. Red flags that tells you to walk away from a deal.
Oh, yeah, 100%. If you don't like the person, if you get that, you know what I mean by that feeling in your tummy when you talk to them, you're like, I don't know, this isn't the right dude. I don't, you know, it's not about terms. It's not about prices. If there's something unsettling, when you're like trying to negotiate and the person gives you the creepy feeling, that's what I've learned. Like if you don't feel good about it with that person, don't do it. Human empathy is still one of the best tells. What I mean by a tell is, can you tell what's going to happen? If you get a bad feeling, walk away.
Yep. One sales mistake you see founders repeatedly make.
Yeah, I'll make it 2. Number 1, they talk too much. They don't listen. And number 2, they think people care about their product. No one gives a shit about your product. It's irrelevant. It's only the benefits. Stop talking about your product.
Best financial advice you've ever received.
Ever received or ever followed? Because I don't follow the advice I receive. So the best advice I ever received was from my dear friend Kent, who said, save more, spend less, which is true. And but the actual best advice is time wins every time. Just leave your investments forever. Just time wins. Time is there's no trading strategy that's any better. It's just time. Compound. I think somebody called compound interest the 8th wonder of the world. It truly is, right? It truly is. Not that I listen because I built Bambu and try to, run it up again. But yeah, best advice, time.
Yeah. One piece of advice for founders going through difficult times.
Again, make it 2. Number 1, call me or call someone who's been through it to talk to. It's really important. With all seriousness, very lonely as a founder. It's, like you can talk to your partner, but, they may not know they can't help in the exact. And it takes a founder who's been right in the firing line to talk to another founder who's been right in the middle. Find a founder. And honestly, if you're listening to this and you're a founder and you're in a crappy position, hit me up on LinkedIn. I can't solve your problem. Like I have no solutions, but I can listen and I can talk. And the other one is be completely transparent. Tell your investors it sucks. You have to manage your employees because they still have to work, but as much as you can. This is as cliched as you'll get, Emad, but the truth will set you free, man. Like you got to say it. A lot of people like, oh shit, the investor will be angry. They'll be more angry if you don't tell them what's going on. And look, your other advice is never do anything bad. Like at Bambu, we didn't do bad things. We just made some business mistakes that compounded and took us out, right? But yeah, so the summary is talk to other founders and be transparent.
Thank you so much, Ned. It was great talking to you. And I think I've been following you for a long time now, and I've seen your journey, and you are like an inspiration in the sales world. Like at this age, I want to be like you, doing
Oh,
running out there and talking sales and B2B SaaS. And I hope and wish you well. And I'll be reaching out to you on LinkedIn if I need any help. So we'll stay in
Of
touch.
course.
Yeah. So thank you.
And look, thank you very much on email. Honestly, I mean, like, I love. Obviously, I think people can feel the kind of desire and passion. I love talking about it. And honestly, man, good job. Like, young guy putting out content. It's the way to do it. Like, it really is. It's really important. And look, thank you for doing that and sharing it, because it's great. So I really appreciate it. Thank you.
Sure. Thank you for your time.